Howdy, Team 42. It's your skipper here, Darius to present our macro minute for Monday, January 27th, 2025. As always, we'll start with the executive summary from today's leadoff morning note. If you would like to review the analysis supporting these conclusions, as well as what specific changes you need to make in your portfolio to remain on the right side of market risk, you need to be a client of 42 Macro. So today's key macro question is, does DeepSeek represent an end to U.S. exceptionalism and by extension, the bull case in U.S. AI stocks? Our answers are the NASDAQ 100 is down 3% today on news that Chinese AI startup DeepSeek built a model that outperformed Meta's Llama 3.1, OpenAI's ChatGPT-4, and Anthropic's Claude Sonnet 3.5 in accuracy tests for complex problem solving, math, and coding. Last week, DeepSeek released R1, a reasoning model that also outperformed OpenAI's latest O1 in many of those third-party tests. The key issue for investors is that DeepSeek built their AI model in only 2 months for only $6 million, which is a drop in the bucket compared to the hundreds of billions of dollars being spent on AI development by the hyperscalers. Another issue for investors is that DeepSeek successfully navigated U.S. export restrictions on the most advanced semiconductors. China was cut off from accessing NVIDIA's H100 chips, forcing DeepSeek to train its model using cheaper and less powerful H800 chips. In my conversations with private AI company CEOs and tech PMs from this weekend, the DeepSeek developments do appear to be a game changer from the perspective of what is possible from a software development perspective. While DeepSeek calls into question the sheer amount of AI capex spend globally, some believe that the techniques it used to train its model will be incorporated by the hyperscalers into larger, more expensive models with even more functionality. Another potential positive catalyst is the likelihood we see even more intervention from the U.S. government regarding subsidies and export controls. In highly uncertain times like these, investors must trust their risk management systems far more than their gut feel or their understanding of company fundamentals. The market will figure out how much to discount the DeepSeek developments and what that ultimately means for the bull market in AI stocks much more efficiently than any individual investor or investment team. Transitioning to our 42 Macro Dashboard, as always, we'll wrap up with the question from our community. This one's regarding the Global Trade and Currency Manipulation Review. It says, hi, Darius, you referenced the Global Trade and Currency Manipulation Review in early April during this weekend's Around the Horn. Do you have any further info on that at all? Trump's February 1st tariff rhetoric, does this throw February 1st tariff rhetoric out the window? My apologies there. So I don't think it throws it out the window because I think ultimately the Global Trade and Currency Manipulation Review will be the tool that the Trump administration essentially assigns what is likely to be a significant advancement of tariffs against China across a wide variety of products and imports. And so the reality is something we've talked about ad nauseum in our research, which is they're going to have to find revenue offsets in the reconciliation process, and tariffs are the obvious solution. And so we got to expect that the Global Trade and Currency Manipulation Review is going to outline China as a chief competitor economy that is essentially playing foul as it relates to their global trade and industrialist policies, as well as potential currency manipulation. And so if they can sort of check both of those boxes, it will authorize the Trump administration to begin levying incremental tariffs against China. And this is something, in our opinion, has to happen, just given that if they want to extend and expand the Trump tax cuts using the congressional reconciliation process, they're not going to be able to do that in a deficit neutral way without revenue offsets and expenditure reduction offsets. So they're going to use spending cuts, budget cuts from DOGE recommendations, but they're also going to have to find revenue increases. And it's our view that tariffs is the obvious solution, just given President Trump's rhetoric on the campaign trail, his great many promises on the campaign trail to tariff countries like China, Canada, and Mexico. And then specifically with respect to Canada and Mexico, it may be the case that the February 1st tariff announcement is more negotiating to get what is, our key trading partners, which are Canada and Mexico, to get them sort of falling in line with respect to some of the industrialist policy from U.S. industrial policy demands. So I think you have to think about this from a separate standpoint. China is a big source of potential income. Revenue, or Canada and Mexico are being more or less used as a negotiating tactic. That's our general take on tariffs, but obviously we can be wrong on that and wrong on anything. So we'll wrap it up there. Darius presenting our macro minute for Monday, January 27th, 2025. Everyone have a wonderful day out there. Best of luck, and we'll catch you back here tomorrow. Cheers.